Archer and Joby Aviation pullback. Let's discuss it. Hold up. I need you to do one thing. And this is not for me, this is for you. You need to save this video to refer back on any pullback that occurs. If you start to doubt yourself whether to keep investing in Joby or Archer, even on red days, refer back to the video. Guys, we spoke about Archer and Joby's bull run in my last video, but we're here today to talk about the slight pullback we've seen today, as we're now getting some rumbles of fear. Like we knew we would. Let's see what happened since the last video, and then let's see if you're right to remain bullish despite any pullback that occurs. So we're going to keep the same format, and we're going to start with Archer, but don't be panicking. I'll be swapping between Joby and Archer throughout. So after the significant surge, and that's the important thing, remember, significant surge, Archer Aviation stock experienced a 3.8% decline, bringing the share price down to $7.20 and the market cap to $3.09 billion. And it's made investors wonder, what has changed since yesterday's discussion on the bull run regarding Archer? Well, let's look back at our key factors that affected the bull run in order to get the answer. So the fundamentals remain intact. Despite the stock price correction, all the driving factors mentioned in yesterday's video remain unchanged. Archer's technological advancements, regulatory journey, and strategic alliances are all progressing as planned. There have been no new technological breakthroughs, regulatory updates, or significant partnerships announced that would explain the drop, suggesting that the movement is indeed sentiment driven. In regards to market volatility, the urban air mobility sector is inherently volatile, and such fluctuations can be expected. The minor dip might reflect profit taking after a rapid rise or a broader market correction. So do you want me to fill you in on the one thing that has changed? It's market sentiment. For beginner investors, this feeling you're feeling today is the exact feeling that many others like you are feeling. This is the rumbles of fear. Let me ask you this. Why were you willing to buy yesterday, but you're not willing to buy today? If anything, the price is cheaper. This is one of the phenomenons of the market. When everyone's scared as a unit, it brings the price down. But you need to remember my philosophy yesterday. I love red days. I only ever buy on red days. However, you're not me, and I'm not you. So never follow me for financial advice. Let me speak to all investors though. Let me give you some reassurance. The core value and potential of Archer Aviation has not diminished. Their path to becoming a key player in the urban air mobility market remains on track. I should highlight caution though. Investors should remain vigilant, especially the short-term traders. If you're long-term, this could be an opportunity to buy the dip, as long as you believe in the long-term story. However, you should also be aware that such volatility might continue, and having a clear exit strategy is wise. The stock is already at a 52-week high, so if you're looking at it in the short-term view, it looks like a massive dip, but when you pull it back to the long-term perspective, it's only a blip in a major bull run. So now, let's waste no time and let's jump across to Joby. Joby saw its stock decrease by 3.4% and is now trading at $7.91 per share. Its market cap has been decreased to $6.05 billion. But again, what has changed since yesterday's discussion? Apart from market sentiment regarding Joby, we still have continued leadership in the eVTOL space. Joby's position as the leader in the eVTOL technology and its partnership with Toyota for manufacturing support remains unchanged. Their progress towards certification and market entry is still on course without significant alterations, and there's no new setbacks. There are no new reported setbacks or negative news that would justify the decline in the stock price, indicating it's likely a case of market sentiment adjusting or a sector-wide correction. Let me give some reassurance for the Joby investors though. The market cap correction does not reflect a change in Joby's fundamentals or strategic positioning. Their market leadership and technological edge are still factors that could lead to long-term gains. Let's exercise some caution though. For the short-term investors, this dip might be seen as a buying opportunity, but they should also be prepared for further volatility, as we said above. The long-term investors should view that this is part of the natural ebb and flow of stock markets, focusing on Joby's long-term strategy and market potential. If you can see the price going higher in the next 5 to 10 years, then today's price is just a bargain. Taking a look at the long-term perspective of Archer and Joby, the overarching trends supporting the urban air mobility market remain strong. Long-term investors should continue to evaluate these companies based on their progress towards operational readiness, market entry, and long-term market potential, rather than focusing on daily price movements like today. When looking at it from a short-term perspective, for those with a shorter investment horizon, you need to re-evaluate your entry points. The recent dip might offer a more attractive entry point for those who missed the initial surge, but be prepared for volatility. Set clear stop loss orders to manage downside risk given this sector's volatility. Guys, as a unit we need to keep monitoring and be ready for adaptation. Keep looking at the technological progress of Archer and Joby, sieving through any news on further development, testing and certification milestones. You need to keep an eye on the regulatory environment. The updates from the FAA or other aviation authorities can significantly impact stock performance. We need to also watch for competitive moves, as these can influence market sentiment and stock prices indirectly. So let's talk about the fundamentals of Joby and Archer's bull run and where the prices are going. But first, let me say, the recent dips in Archer and Joby stock prices after their impressive surge are primarily indicative of market sentiment corrections, rather than changes in the company's underlying value or strategic direction. While these movements can be disheartening for new investors, they are not unexpected in such a speculative and high growth industry. I am encouraging investors to focus on the long-term potential of the urban air mobility market and what these companies' roles are within it, while maintaining caution due to inherent volatility. For those with faith in the sector's future, these dips might be viewed as opportunities to buy, but they could also be considered reasonable valuations. The recent pullback makes us wonder, how should we navigate this market in all the conditions? But don't worry, I've got you covered, and I'll meet you there next.